Let's talk about shares of McDonald's this hour. They're up more than 20% this year. Another new high today, as MKM Partners says the stock should keep rising. That firm initiates coverage today. $250. Price target's the second highest on the street. I'll focus on the left-hand side of the desk here, Joe, because you and Steph both own the stock. You first.
I think we're both relatively somewhat nervous about the valuation and wondering when the shoe's going to drop. But listen, they've done a tremendous job over the last 4 years. The stock price is a double, and they've done it with a massive refranchising effort. They're now above 95% in refranchising, and then they've incorporated the digital strategy. When you have a strong digital strategy and you're combining it with fast food service, you are going to gain momentum, and that's what McDonald's has done. They've made the experience for the consumer faster, quicker, cleaner, and a better menu.
So how about this, Steph? McDonald's has done incredibly great, right? Incredibly well. The stock, as Joe said, has been off to the races. Year to date, okay, McDonald's up 23%. Wendy's 27%. Yum, 26, QSR, 42, Starbucks, 48.
Yeah, so it's
what does that tell you?
Well,
and I don't mean to bring that up as a negative on McDonald's. It's just there's so much focus on McDonald's. There's so much focus on the stock hitting another new high. But, oh, by the way, these other stocks have done better.
Yeah, these other stocks have more beta. They have actually higher growth, right? So and they have, by the way, also much higher multiples. So the reason
There it is, and that's the savior, if you will, for why you like McDonald's over them?
Well, so here's the thing. I don't own a lot of consumer staple stocks because I find them very expensive relative to the growth that you're getting. So something like a P&G is 26 times and it's growing. Organic growth of 5%, 6%, maybe even 7% is sustainable. I don't think so, but anyhow, that's what they just produced, and it was a good number. But that's a low number to pay, right? Organic growth of 7% at 26 times. So these guys are going to do double-digit. McDonald's is going to do double-digit earnings. They're going to do mid-single-digit comps. It acts like a staple stock. So where I'm underweight staples, I can actually plug it with this one. And oh, by the way, you have a CEO who's done a remarkable job in totally transforming the company on the digital side, on the menu side, and to Joe's point, on the consumer experience side. What bothers me, A, is valuation, and also 75% of the sell side has buys on the stock.
Can you get another 15% out of this thing?
I mean, I think if this trade of owning some defensives, and if that continues, this should continue to do fine. But the expectations are
some of this is like technology, and the companies that have invested over the last few years, they're seeing the benefit of that in terms of more habit-forming behavior on the part of the consumer.
Yeah, the digital
so that's number one. But to your point, it looks like a re-rating for the whole sector. Shake Shack's up 101% year to date from Jan 1. The fundamentals of the business did not go up 100%, okay? They're doing well, but that's not the reality. The reality is Wall Street likes these companies again, and a lot of it has to just do with an overall strong environment.
Dude, the Nuggets, though.
And Judge,
but if the consumer is doing well,
he was telling me about the Nuggets.
Restaurant stocks do well. Like, that's a truism. Right. Now you combine that with oil and gas not being a price impediment to the consumer. There's a lot of good things out there.
With everything we've been talking about, with what Michael just mentioned about, bonds and what you might see in Hong Kong, or the lack of something that could percolate out of Iran or any of these other things that could become a headline like that, not just a tweet. That's all the reason you need to know as to why Joe and Steph are winning with this trade, because nobody wants to sell. Nobody wants to get out of McDonald's here, Judge. One of the safest stock. Look at their recent earnings. They were just in line. You show me another stock, guys, where it's just in line with revenue, in line with earnings per share. That stock's going to get slammed. McDonald's didn't. And in fact, it's like $6 higher than when they reported that. Nobody wants to get out of this stock.